Hello and a very warm welcome to Money Control. Budget 24-25 has been presented today and it's made headlines for its fiscal prudence and its focus on employment creation. I have with me the two chief architects of the budget, Mr. Somnathan and Mr. Tuin Kantapande. Mr. Somnathan and Mr. Vane, congratulations for presenting a very prudent budget once again. I just wanted to begin by asking you that the budget assumes a nominal GDP growth of 10.5% for FY25. However, inflation continues to be a concern. So what is the real GDP that you're expecting? Are you expecting it to be somewhere around 7%?
See, for the purpose of budget making, we don't need to estimate real growth. We only need to estimate nominal growth. I'm just being very practical. The only number I need is the nominal growth. I'm confident the nominal growth is unlikely to be below 10.5%. So that's how we fixed our estimates on the basis of 10.5%. Because if you have real growth of 6.5 and inflation of 4, you're at 10.5. If you have real growth of 7, inflation of 3.5, you're at 10.5. And I think the likely numbers will be in this range. Growth between 6.5 and 7, and inflation here is a combination of CPI and WPI. So I think that combination is likely to be in the range of 3.5 to 4%. So that combination of numbers means 10.5 is probably the best number for us to pick.
Okay. Overarchingly, there's a sense that this time around, maybe you could have gone a little easier on the fiscal prudence bit and maybe spent a little bit more. Because if you look at allocations across a lot of your flagship schemes, that they haven't really gone up substantially. What's the thought process?
You need to look at the actuals of the previous year and see what the spending capacity on those schemes is. So it's not as if we have provided for any of the schemes. We have provided what the scheme is able to absorb, and many of them are centrally sponsored schemes which have implementation done by states, which require states to actually do the last mile. And the flow of funds depends crucially on their ability to execute that last mile.
Right, but isn't there a case for a revision of PM Kisan? Because there have been concerns raised that PM Kisan constantly...
PM Kisan is essentially an income transfer.
Right.
So, that's a discretionary transfer. Anything can be increased. All extra free transfers are always liked and all tax increases are disliked. But the point is that the best use of the money, or is it better used in some productive fashion? I mean, that's a question which is to be addressed, and we think we have got the balance right in terms of what we have done.
But would it be fair to say, Dr. Somnathan, that you've used the transfer from the RBI and the higher than expected tax receipts, which is both actual so far and projected, largely to reduce the fiscal deficit to come to the 4.9 number?
I think we've used it, approximately half of it for deficit reduction and half of it for additional expenditure. That's the actual way it's panned out, because the total increase that we have got from both sources is about 0.4% of GDP. We've done half of it as fiscal. Remember also that the RBI dividend is, it may not necessarily crash next year, but it's not a recurrent source of income. And building public expenditure programs on one-off dividends is a very dangerous thing, because public expenditure programs can be switched on easily and not switched off easily. So we have not chosen to spend the entire dividend on new expenditure programs, but we have started new expenditure programs. If you look at, you mentioned PM Kisan, but what we have done is to increase Gram Sadak Yojana, Awas Yojana. These are also rural spending, but they're not necessarily cash transfers. They are transfers that involve asset creation and rural asset creation. So there is an increase there. There's an increase on these employment schemes, partly this year, more next year. So I think we have balanced the use of this extra resource in terms of partly fiscal consolidation and partly new expenditure.
If we can come to the receipt side for one moment, and if I can bring the Disinvestment Secretary in, could you give us there's 50,000 crores figures which is mentioned in the budget, but could you give us a broad state of play of the disinvestment program, specifically with regard to IDBI Bank, and also is there, some media reports also indicate there's been a fundamental rethink about what the government feels about disinvestment because of the rising values of PSU, so should it go in for strategic privatization at all? So on these two aspects, if you could weigh in.
I think if I may say so, I'm not a disinvestment secretary, I'm DIPAM secretary. And DIPAM stands for Department of Investment and Public Asset Management.
Right.
And I think that underlies the new approach that we have of public asset management, and not merely, it's like, the asset you manage in private side. if you have a house, you don't always sell it. You also give it on rent. And if you, in fact, there are entire REITs, the entire REIT structure is, about rental housing and so on. So similarly, if you have a public asset, we are not really only to sell that, we have to actually create value as a part of the economy and manage it efficiently. Being a majority shareholder, the government must manage the public assets profitably, and there should be a profitable growth. And government is not alone in this, because we have brought in the listed players, we have brought in the minority shareholders, and the investors have come in only to be saying that we are in some respects, have some fiduciary duty for their investments. So therefore, this approach where we are value creating, in which we are bothered about fundamentals, we are bothered about capex, we are bothered about return on capital and return on equity, consistent dividend policy. And in the process, when you create a value, you can also do disinvestments of a different kind. So disinvestment is a continuum from listing to maybe getting rid of control. So getting rid of control is only one aspect of that. When we have a certain transactions which we think that we have cabinet has taken a decision for privatization, but there are others where there is no management control which is passed on, and the listing is done, the value is created. So I think in this overall scenario, that's why we have got rid of a disinvestment target, also specifying the transactions, that which one we are doing, this and that. That approach we have shed. Rather, what we are looking at, okay, we have about 1.06 lakh crore, where the partly dividend, partly miscellaneous capital receipts. The miscellaneous capital receipts, incidentally, that 50,000 crore also has two sources, which is a certain amount of asset monetization accruing to the consolidated fund. Not every asset monetization, it accrues to the consolidated fund. It goes to the concerned company for their own capex. But to that extent it does. For example, in case of InvITs, etc. In case of, say, for example, TOT and other projects of the NHAI would also get in there. And then, this 1.06 lakh crore of targeted does not also have the, from the financial institutions of the banks, which they were not giving dividends earlier, increasingly so. Apart from RBI, the others are giving dividend as well. So I think in that strategy, we are looking at all different elements of public asset management as not merely disinvestment. Now coming to the second part of your question is on specific transaction where we have done, we will continue to see that they are taken to their logical culmination.
So what progress have we made in the IDBI disinvestment?
Well, IDBI, we expect that RBI will complete its fit and proper soon on the bidders, following which we will do the due diligence because we have to take them to the virtual data room.
But this has been held up at the RBI level for quite some time now, right?
Well, it has taken some time, yes.
So is there a concern
But
there?
you haven't got it as yet.
No.
We haven't got yet, but I believe they are in advanced stage.
So, Dr. Somnathan, if I could ask you about the revenue estimates that you've made. There has been no change in the income tax estimates in the budget, despite the fact that there's been a hike in LTCG and STT. Are they both?
And there has been a reduction in personal income tax rates and a reduction in excise duty on gold. Customs duty on gold.
So that's where it's gotten offset.
So the figures are mentioned. There's a net 7,000 negative. It is mentioned
So what
in the
was
speech.
what was the thought process behind the move that has been made on hiking LTCG and STT? Because it spooked the markets. A lot of memes are doing the rounds
Yeah,
on.
I think everybody was expecting it, but it still spooked them.
Yeah.
Because everybody told me before budget, this is we want simplification, we want rationalization, we have too many rates, too many complications, some are indexed, some are not. One is at 15, one is at 10, one is at 20.
But you simplified upwards. I think there was...
Yes, and some downwards. Some downwards.
Yeah.
So,
Yeah, the
so
property
any
tax.
simplification doesn't necessarily... one should not ask for a simplification if one is asking for is a reduction. Let's be clear.
But that's what
even
we
in
need.
GST, let me say, when people say rationalization of GST, if everybody is expecting that all rates will go to 5%, I think it's a wrong expectation. So this is a pure and simple cleanup of our very complicated rate structure in capital gains along with an increase. So the earlier structure was something for listed, something else for listed REITs, something else for unlisted, something else for property, etc.,
Right.
etc. Now we have a simple regime. It's 12.5% without indexation
Across all
across all asset classes. And the period of retention is 1 year for all listed assets, including REITs and InvITs. And the period of retention for all other non-listed assets, including gold and property, is 2 years. So there is a uniformity, it's a much simpler structure. The return forms will become smaller once we get through this transitional year, because this year there is a difference between gains before 22nd of July and after. But in the future, you'll see the form becoming much easier, because many of these classes will now compress together. So it is also a fact that our rate of capital gains tax by global standards on long-term listed equities is low. It is not high. It's much lower than our marginal income tax rate of 39% at the highest end. It is a fact that 88% of our capital gains income is earned by people with incomes above 15 lakh rupees and 62% by people whose incomes are more than 1 lakh rupees. So this is not the poor we are talking about.
You mean 1
But
crore?
the-
1 crore, 1 crore, sorry, 1 crore. 62% accrues to people whose income is more than 1 crore. I'm talking about capital gains. So capital gains is by no means the preserve of the middle class or something like that. In fact, quite the opposite. I would also say that this is the most elastic item of revenue sources in income tax, because this is growing faster than salaries, it's growing faster than property income, growing faster than income from other sources. If we don't tax this at an appropriate rate, this country cannot become a Viksit Bharat. We can't become a Viksit Bharat without taxing the fastest growing element of income at a decent rate. So we've compared international rates. We are still very low at 12.5%. Canada increased its capital gains rate in this budget to 66% of the applicable rate, which in India would be 26%.
Fair enough, but that's a developed economy. You look at the per capita
No, a
income.
developing economy needs more resources than a developed economy.
We
actually need
fair
more
enough, fair
resources
enough.
to be raised.
But the middle class
Is getting an
constantly
extra benefit of 25,000 more of tax free capital gains. So what was 1 lakh has become 1,25,000.
So, Dr. Somanathan, following the logic,
And our evidence does not show the middle class as the main earner of capital gains tax. It shows the rich piggybacking on the middle class, claiming that it is a middle class issue.
but to follow the logic of what you are saying, and your reference to Piketty in an earlier interview, wouldn't it be then logical to assume that the capital gains tax would go up and at the end converge with the
remember
marginal
I said
rate?
the main aim is rationalization.
Right.
We do not think, we have not attempted to increase rates on any other asset class. We have unified all rates at 12.5%. 12.5% on property is approximately the low end of where it actually is today. 20% with indexation, we have done the calculations, approximately works out to, in most cases, 12.5% or more. I mean, the actual incidence is lower at 12.5 in most cases. So it's a function of how much the property has grown. If it's grown at anything above 10%, this is actually better. And most properties grow at more than 10%.
So, sir, your arguments about capital gains going mostly to the rich are well taken. It's obviously true. But another way to think about this could be that, let's say, countries like Hong Kong or Singapore or some of the Far East Asian countries have.
For
much
this, let's compare Hong Kong and not the US or UK and become a Viksit Hong Kong. We don't want, I guess, the democratic freedoms of Hong Kong here. So, I mean,
Sure.
Very quickly, you've estimated about 1.2 lakh crore revenues from spectrum auction. But that's not how it has panned out in the past. So what's driving the confidence that you'll be able to raise 1.2 lakh crores?
I have gone by the figure given to me by the Department of Telecom. So I wouldn't be able to answer that question.
I think it is not only auctions.
It's not just telecom.
It is not. No, I mean.
It's not just auction.
Okay, it's just not spectrum
Where?
auction.
Which one?
This,
Telecom non-tax revenue.
1.2 lakh crore revenues from spectrum auctions. That's
I wouldn't.
No,
be able to-
I mean
Okay,
it will
sure.
be a total thing, because they must be having certain things which are.
I think there are auctions that have been
auctions
completed
have been
which pay in
completed and
installments.
they have to have
Okay.
collected in installments.
That's my impression.
Sure.
But I
That
cannot
is how
give
it
you
is.
a
It is not, it is not a
It's not that you
one-time thing.
pay the entire auction
It's
amount.
pay
No.
as you go.
sure.
You auction and you agree to pay in installments.
And this 10,000 crore that has been allocated for a price stabilization fund, that's a huge quantum jump
Yes.
from the last. So what was the rationale? What's the rationale behind
It
that?
is to keep prices of pulses and oilseeds under a decent, I mean, we want to increase MSP procurement of these, give farmers an assured price. It has succeeded in wheat and rice. We now need it to succeed in pulses and oilseeds, for which a corpus is needed. This is not necessarily an annual feature, because unlike, wheat or rice, there is not necessarily going to be a huge subsidization of the, so we buy it and we sell it. We buy it so that farmers have an assured price, for which we will need to maintain some buffer stocks. So this is basically an infusion into the price stabilization fund, mainly for the products that are not currently fully procured under MSP. Doesn't mean we'll necessarily procure all the product. We will give a guarantee of procurement, and whatever is not absorbed at MSP can come to us. So it will be a fallback arrangement.
It was always there, except that it is being expanded.
It's been expanded
No,
and made more effective.
Yeah, because the earlier allocations were to the tune of maybe like a
No,
few
and earlier
hundred
the
crores.
proportion
early-
that was being bought was small.
Much smaller,
We're going to be
yeah.
more
Earlier,
ambitious.
couple of years, 3 years back also, it was much larger amount. The corpus is
1,000 crores from what I remember reading. 1,000 crores. So I've never seen it at a 10,000 crore number that we saw.
No, it is. The intent is to be much more serious with these buffer stocks of these commodities. Now that food inflation is becoming more difficult with the Ukraine and all these, the international prices of food have become a problem.
Sure.
So we need to do a better job on the domestic side, which is the only thing we can control.
So just to come back to capital gains tax, just one more. I don't want to commit you to finance secretaries who might come after you and finance ministers, but nonetheless, are these the terminal points, at least for now? And how
I would certainly say that there is no intention of, at this point of time, of going anywhere else. This is not a intermediate station. This is the destination. It is, and I want to repeat, and this is a serious point.
Sure.
We did intend to unify and simplify. Otherwise, frankly, I don't think 12.5 is necessarily the right rate for capital gains on long-term equities. It could be higher.
Yeah,
But
of course.
I don't think it is right to bring everything into that rate. And we have attempted basically a rationalization, but not on the side of lowering the tax take, because this is a sector which we think is a future elastic source of revenue and must be tapped, because we will need income from this revenue. It's already very significant. We get over 1 lakh of crores on this. So it's not small anymore.
the
And
increase is also marginal. It's
very
not-
marginal. From 10 to 12.5 is, Canada increased it from 50% of applicable rate to 66% of applicable rate this April. The US has proposed, Mr. Biden has proposed an increase. So this is,
So Mr. Biden is no longer in the race.
yeah, he's not increasing, but his budget doesn't get passed anyway. That's different.
And his successor is unlikely to implement higher rates on capital gains tax. But
If you like that kind of regime, that's a different matter. But I think we are looking at what's good for India. India does need tax revenue.
Sure.
Earners of capital gains are not poor, and we will continue to tax capital gains. And we
otherwise-
need to tax capital gains, and we need to tax it at a decent rate.
And how do you
not
otherwise
so
run this
concessional
employment
that,
scheme, Because you got to be spending on employment.
And
you got to be-
inequality
Right.
is rising primarily through share wealth globally.
right.
Let's also understand, we keep talking about rising inequality. The biggest source is listed equity valuations. So this is not a step which is in any way immoderate. It's a very moderate change in taxes on a very large source of wealth in the country.
So one on the fiscal deficit. So next year is 4.5.
Yes.
Then I think the 3% number, which was a relic of the Maastricht Treaty, I think has been abandoned, if I am not mistaken. And instead, you move towards reducing the public debt as a percentage of GDP.
Our
That's-
aim, as stated in the speech, and it's a formal and important statement, is that we move towards targeting a reduction in the public debt and fixing a deficit target that aligns with that. So it's not that we are
So
not
not
going to have a
necessarily-
deficit. We
not
will have a
necessarily a
deficit target.
fixed ratio.
But the deficit may not be a fixed number.
Right. But the debt will be, I mean, is there a number that
There will be a goal for the debt, but it will be a declining goal, certainly. And which means the key difference is that growth rates, interest rates, inflation rates, all these affect what is a sustainable fiscal deficit.
Right.
A single numerical target, irrespective of growth rates, is not, I think, the way we would like to manage this, because that involves perhaps too much of a growth sacrifice in a country like India, which has a long way to go in terms of growth, and where investment is also going to be important. Growth is always going to be as important as other parameters. So this will give us the flexibility to ensure that on the one hand, we are not incurring debts that we cannot sustain, But on the other hand, we are not completely hamstrung by some number which is fixed theoretically on some basis.
Right. And which countries who have been lecturing us on fiscal deficits have been quite cavalier, particularly in the wake of COVID.
Yes.
All right, I think we're out of time. Thank you so much for joining us on Money Control and for taking all our questions very patiently. Thank you.
Thank you.